the past 2 years have been an absolute nightmare of supply chain interruptions, one thing after another. This factory is losing insane money right now. So, but both Berlin and Austin factories are gigantic money furnaces right now. There should be like a giant roaring sound, which is the sound of money on fire. Okay, Berlin and Austin are losing billions of dollars right now.
Tesla's not immune from some of the supply chain issues that are really impacting companies inside and outside of the auto sector. But we think that this company continues to be really well positioned. We're expecting that they're going to be able to ramp production with our Austin and Berlin facilities ramping up. And this company has pricing power, and that's important in this environment.
There's this concern that the factories in Berlin and in Austin could become the next manufacturing hell, which really hurt Tesla in the past, bringing out the Model 3, really almost put the company into bankruptcy.
In this video, Elon Musk says some things that are accurate, reasonable, and to be expected, and the mainstream finance media, as usual, has an absolute fucking field day. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store, so check out the links in the pinned comment below, and thanks for your support. First up, Tesla stock today down almost 0.5%, closing just over $700 per share, and yep, I'm gonna say it, the trillion and second time bargain of the fucking century, in my opinion. In contrast, today the Nasdaq 100 up almost 1.5%, Apple stock up over 2%, Amazon stock up well over 3%, Google's parent company Alphabet stock up almost 1%, Rivian stock up over 3%, Lucid stock up over 7%, even the ARK Invest flagship ARK Innovation Fund up over 7%. So why did Tesla underperform basically everything else in the same vicinity in terms of growth and tech? Well, I have a funny feeling it's got a lot to do with Elon Musk's recent comments in an interview with Tesla owners Silicon Valley, stating things that are painfully obvious, unsurprising, and to be expected, but for some reason the mainstream media seems to have run away with this as usual and decided there's a major problem when there is not. So let's listen to what Elon Musk actually said. I'll share a few thoughts and comments along the way, and then we'll watch how the geniuses in the mainstream finance media have reacted to these comments.
You should think of car companies as like at any given point they desperately want to go bankrupt. A car company is desperately trying to go bankrupt at any given point in time. So in order to have that not be the case, factories have to be active. Otherwise, you have parts piling up in warehouses all around the world, and you can't ship but if you're missing any parts, you can't finish the car and ship it. So the past 2 years have been an absolute nightmare of supply chain interruptions, one thing after another. And we're not out of it yet. That's what overwhelmingly our concern is, how do we keep the factories operating so we can pay people and not go bankrupt? And then everything else is like nice to have.
So let's talk about these extremely reasonable and obvious comments from Elon Musk. The automotive business is extremely capital intensive, and a single bottleneck in your production process, something that stops you from producing and or selling / delivering your products to customers, means you are burning insane amounts of money. This is why Elon Musk is explaining that car companies, are desperately trying to go bankrupt. A delay here or there can literally cost billions of dollars. This is quite different from saying that Tesla is on the brink of bankruptcy, but it's important to understand an automotive company needs to be humming along like a well-oiled machine, otherwise we can see brutal financial losses. This is to be expected. This doesn't just apply to Tesla, this applies to everybody producing vehicles.
Even recently, like the COVID shutdowns in China were very, very
stupid, futile, inhumane, Oh, wait, sorry, I didn't mean to cut off Elon. What was he saying about the lockdowns in China?
The COVID shutdowns in China were very, very difficult. This factory is losing insane money right now because we can't make it, we should be outputting a lot more cars from this factory versus a very puny amount of cars. But we had challenges with the 4680 ramp and with the structural pack ramp.
Unsurprising, in fact, to be expected, ramping up new technologies, mass production of the structural battery pack and the 4680 cells, there's bound to be a few hiccups along the way.
And then ironically, the tooling, because we were able to do 2170 cells, but the tooling necessary for making 2170 variant cars was stuck in China. So we had this Shanghai factory in op. We got the tooling to enable this factory stuck in port in China with no one to actually move it. which basically then caused this factory's production ramp to be very tiny.
Once again, I'd just like to take this opportunity to provide a well-deserved round of applause to the brain-dead faces in China. COVID zero. Good one, you fucking idiots. How's that working out? Not only destroying China's economy, but also fucking the global economy, making supply chain challenges even worse. The point is, some of this was within Tesla's control, ramping up the 4680 and the structural pack, but their backup plan to produce vehicles with 2170 cells, the fallback plan, well, China just came along and fucked Tesla in the face while they were asleep without consent. There's a word for that. Not much Tesla can do about this other than just point out what happened.
Now this is all going to get fixed real fast, but it requires a lot of attention, and it will take, like I said, it'll take more effort to get this factory to high volume production than it took to build it in the first place. Mm-hmm. And the same is true of Berlin. Berlin's in a slightly better position because Berlin started off with the 2170 style and did not have the 4680 and structural pack risk. So, but both Berlin and Austin factories are gigantic money furnaces right now.
Again, I want to point out this is unsurprising. Obviously, a new factory, as it begins to ramp up, is going to be burning a shit ton of money because you've got a ton of equipment, a ton of employees, a ton of products, materials and everything, but your output is absolutely piddly. This is normal. However, it has been accentuated by the lockdowns in China, the inability for Tesla to use their fallback plan, the 2170s and so on. The good news is, a factory that's burning billions of dollars is okay if your overall company is making billions of dollars, which is exactly what Tesla's doing. They're not in the same situation, for example, as, say, Lucid Motors or Rivian, who at this point in time aren't making any money and are simultaneously burning billions of dollars. Tesla is in a much stronger financial position, to say the least. Tesla's on the other side. They've done the hard work. They've built a financially resilient, incredibly, ludicrously profitable company. So over time, as Tesla's profits continue to grow, revenue continues to grow, costs continue to come down, demand continues to increase, they'll have many other projects that are temporarily burning billions of dollars, potentially billions of dollars per quarter. But in the scheme of things, that's fine, because the overall company is still printing billions of dollars, and each of these temporary money furnaces will eventually start contributing enormously to Tesla's profits. This is what separates Tesla from an EV startup or a legacy automotive manufacturer. They're already making insane amounts of money selling electric vehicles that consumers are willing to wait 6, 12 plus months to take delivery of.
There should be like a giant roaring sound, which is the sound of money on fire. Okay, that's what...
Dumpster fire, right? In the back.
Yes. Bigger than a dumpster. Dumpster's too small. Berlin and Austin are losing billions of dollars right now because there's a ton of expense and hardly any output. So getting Berlin and Austin functional and getting Shanghai back in the saddle fully are overwhelmingly our concerns. Everything else is a very small thing, basically.
Fair, reasonable, unsurprising, and to be expected. But of course, don't tell the mainstream finance media that.
To discuss Tesla's road ahead is Colin Rush, research analyst at Oppenheimer. He maintains a buy rating and a price target of $1,291.
So here's Colin with a $1,291 per share price target on Tesla stock, almost a doubling from where we are today. But of course, is Colin credible? Well, as we can see on his tipranks.com profile, absolutely not credible. He's ranked number 3 out of 7,895 analysts on tipranks.com, meaning there's 2 analysts that are better than him, and therefore he's got nothing useful to say whatsoever. And of course, we can see from his 1-year performance on stock recommendations, success rate of a mere 56% and an average return of a piddly 55.4%. So in other words, yeah, Colin seems to know what the fuck he's talking about.
Tim Higgins, Wall Street Journal correspondent and a CNBC contributor. Tim, why did these quotes about the hemorrhaging cash take so long to come out?
Well, first of all, he did them with some enthusiasts, Tesla enthusiasts, a podcast, and they doled it out as slowly as they did. I think their idea was they were more interested in the excitement of Tesla and the products, and this was just a side note, whereas investors are very curious on what's going on. There's this concern that the factories in Berlin and in Austin could become the next manufacturing hell, which really hurt Tesla in the past, bringing out the Model 3, really almost put the company into bankruptcy.
Yeah,
so
these were remarks made to the Tesla Club of Silicon Valley meeting in Austin, Texas. Go figure. But at any rate, he said they're burning capital. Colin, is this necessarily unexpected? Obviously, when you're ramping up a new factory, indeed 2 of them in Europe on the one hand and China on the other, there are huge capital costs and certainly expectable hairball.
I think first we need to put this in context. Elon Musk is not afraid of hyperbole, as we've seen over the course of years.
This is definitely a fair point from Colin, and as someone who personally doles up more than his fair share of hyperbole, I can totally relate.
That's for sure.
So, saying that to get a reaction from a particular audience is not a huge surprise. Second, the supply chain issues, particularly with the shutdowns due to COVID in China, are also not a surprise. Fully digested by the street. And understanding how big that is, short term in terms of cash flow issues is not fully understood. But I think investors really understand that from an order of magnitude. And then you get down to the reality of ramping 2 factories simultaneously with a couple of different battery technologies, and it's a lot to take on for an organization. And so our sense is that investors really expect some growing pains here, but it's not going to be a revisit of the Model 3 ramp where we had major challenges in terms of the actual factory design in Fremont. These guys have definitely improved the factory design. They've optimized it. They've done it very efficiently in China. They've fixed a lot of the problems in Fremont, and we're going to see these factories get up and going as soon as the supply chain issues really start to ease here in the third quarter.
Man, I love Colin. Why? He just gets it. 1, his brain works. 2, he regularly uses it. And 3, he draws reasonable conclusions about Tesla. We heard earlier Tim Higgins from the Ball Seep Journal implying maybe this is going to be a production hell Model 3 ramp disaster again, something that could genuinely have actually killed Tesla. But as Colin points out here, they've learned a lot from this. They've improved their factory designs, their processes, their manufacture, everything, right? This is not the same situation. The primary reason that these factories are burning a little bit more than you'd hope is due to things that are completely out of Tesla's hands rather than due to their inexperience and or incompetence at manufacturing a mass production vehicle, which was true with the Model 3 ramp.
Colin, your point about hyperbole from Elon Musk certainly is well taken. We know that he does sort of speak in those ways. Of course, as an analyst, an equity analyst of the stock, you need to pay attention to it. But I am interested in what you have to say here about the commentary seemingly in a way designed to help motivate employees. What do you mean by that?
Yeah, for sure. He's used the public realm as an area to help push deadlines, and we've seen Tesla really achieve some pretty extraordinary things at the end of quarters. We're here about a week away from the end of the quarter, and I'm sure they're pushing very aggressively to get as many vehicles out to customers as possible before the end of the quarter. And we think this is an area where Elon kind of does a lot of push pull, where he encourages folks, but also has a fairly heavy stick with folks to keep people motivated and focused. And certainly as they go through some of these cuts, I think there's going to be an extra focus here for the next couple of weeks, particularly with the folks on staff.
Tim, let's talk about motivation and focus. Here's a guy who has just put is planning to put billions of dollars into what I'll describe as a vanity play, and that is his acquisition of Twitter.
Now, I don't use this descriptor too often, but boy oh boy is it applicable here. What a silly Elon's Twitter acquisition, a vanity play? It stuns me that anyone, let alone someone as intelligent enough as a CNBC anchor, would interpret Elon's intense, burning desire to ensure functioning democracy and the ability of people to freely share their thoughts, opinions, and ideas as a vanity play. There's nothing vain about this. But of course, if your brain doesn't work and or your head's so far up your own ass that you can't actually see and or hear what's going on in the world, guess you could believe anything, but holy fuck. Take a moment to consider the fact that this moron genuinely believes, he just said, that Elon's acquisition of Twitter has something to do with vanity. Next thing, he's going to be telling me that the Earth's 6,000 years old.
Has he got sufficient focus on his main business, the main thing that is generating cash for him right now, or does he need some motivation to pay more attention to Tesla?
Well, it's interesting. When he was talking about these issues that he's having at these factories, he's talking about how it's going to require incredible focus to address it. And this is the concern that some investors have, is that he is not focused in a period of time when Tesla is trying to get to the next level, become Tesla 3.0, if you will.
Ladies and gentlemen, let's take a moment to collectively put our brains together and try to deduce whether or not this is a reasonable concern of so-called Tesla investors, Elon Musk's focus or potential lack thereof relating to the Twitter acquisition. I don't personally believe that this would be news to any Tesla stock investors. It may be news to some dumb Tesla stock gamblers, but believe it or not, Elon Musk is also currently the CEO of SpaceX. About half his time every week is not focused on Tesla, but that's right, SpaceX. Plus a tiny amount of his time on Neuralink, a tiny amount of his time on The Boring Company, a tiny amount of time trolling and sharing memes on Twitter. Clearly, so far, Given the track record, the give or take $1 trillion of value Elon Musk has created across multiple companies over the last 15 years, I think it's reasonable to suggest that Elon Musk can handle more than one thing at the same time. Now, this may be difficult to believe for people who don't have the same capabilities as Elon, but see his track record, notice what he's done with SpaceX and Tesla and Neuralink and Boring Company this entire time. There is absolutely no reason to be concerned about this. Elon himself has publicly stated that the Twitter acquisition is consuming less than 5% of his time at present. I would conjecture that if any investors are concerned about Elon being distracted, they should probably instead be concerned about their cognitive faculties and their ability to understand what Elon does, his track record, his history, his capabilities, and ask themselves why would they harbor any concerns about Elon Musk being distracted whatsoever, unless they bought Tesla stock before knowing what the fuck they're doing, who's running the company, their capabilities, their history, and their track record, which would be pretty dumb, wouldn't it?
With this incredible amount of growth that they're trying to do. And here's an example of the challenges that happen when you ramp up two factories at the same time. For a traditional automaker with hundreds of years of experience, bringing a new factory online is a really hard thing to do. And Tesla has one of the challenges they have is execution. They struggle with execution.
Holy shit, dude. I think I've already given out the Dunce of the Year award, but I think I may have to actually rescind that award and hand it over to Tim here. This may be the single dumbest thing I've heard said by anyone relating to Tesla all year, and we're halfway through. That is quite an achievement, Tim. Tesla has troubles with execution? Are you fucking kidding me? There isn't a company on earth, irrespective of industry or technology, that's executing better than Tesla. Nor has there been over the last 5, 10 plus years. That's not to say that Tesla hasn't had challenges along the way, but their ability to solve those challenges in record time, to run circles around entire industries while simultaneously disrupting other industries, to invent industry-leading technologies. What the planet is this guy on? Seriously, Tim, dude, that is the dumbest thing I've ever heard you say, and that is saying something. You just have to listen to that again. I mean, he must have misspoke. Maybe he's high. I mean, so am I.
One of the challenges they have is execution. They struggle with execution.
I just cannot believe that he said this out loud. I don't know. Maybe Tim's not as smart as you'd hope he is. If that's the case, let me try to explain things super simply, Tim. If you're a company doing the same shit you've always done, sure, smooth sailing until you get disrupted by somebody that's doing new things, but that's a topic for another day. But if you're a company simultaneously disrupting multiple multi-trillion-dollar industries, transportation, energy, blah, 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 I could keep going on and on and on and on. If you're doing things that have never been done before, if you're innovating, you're inventing new technologies, new techniques, new materials, new production processes, on and on and on and on. Obviously, along the way, there's going to be additional challenges and surprises and obstacles versus a company that's just doing the same shit they've always done. I think Tim here is conflating the fact because Tesla's disrupting and innovating, they experience everything that goes along with that, hiccups and hurdles along the way, and conflating that with an inability to execute. Let's move on.
They might ultimately get it. The Model 3 might ultimately come out to rave reviews and generate those kind of revenues, but it's very messy when they do these things. And so, here's a time when he's trying to take Tesla into the next round with new battery technology and new factories. And he's also focused on Twitter, and some are worried about that.
While I do agree that there are some who are worried about Elon being distracted by Twitter, there are none whose brains work who are worried about that. Yeah, I said it. Yeah, I mean it. Deal with it. Time for some more discussion in the mainstream finance media about Elon's comments and Tesla stock in general.
Tesla's price target cut to $1,200 from $1,300 by Morgan Stanley. The firm is trimming Q2 estimates on lower volume. Elon Musk actually just recently complaining about some supply chain issues. It is one of our calls of the day. Brenda, you recently bought it.
We did recently buy it for the first time.
Well, welcome to the party, Brenda. Better late than never, and I do want to emphasize, you are very late to the party, but at the same time, still early. Now, I know that sounds contradictory, but it's not. You can both be late to the party buying Tesla stock in 2022 and still super early. And if you don't understand why, well, I'm not going to explain it.
But I would say, Tesla's not immune from some of the supply chain issues that are really impacting companies inside and outside of the auto sector. But we think that this company continues to be really well positioned. We're expecting that they're going to be able to ramp production with our Austin and Berlin facilities ramping up. And this company has pricing power, and that's important in this environment. I think to stick with companies that have a great niche, a great moat, and that have pricing power. And we think Tesla has all of those.
I agree. She makes a lot of good points.
In this note, the price target reduction was simply because of an adjustment to the risk-free rate. And I think we'll be seeing a lot of that as interest rates have risen. So I don't want to read anything into that. Still think the company is really well fit here.
Pete, over to you. You have a few Tesla calls, right?
Yeah, I did, and I no longer have those. But yes, we even had some buying just again the other day with the stock trading right around that 680 level, and then it took off to the upside well over 700. But, I think that's what we're seeing in Tesla right now. You see these just surges suddenly and then a pullback, and a lot of it could either be the commentary from Elon Musk himself or some of the news that gets out there. So I think that they will have some issues, obviously, a little bit of a slowdown on some of the volumes of delivery, but they're going to be able to make that up, I think, in the second half of the year. So I think this is definitely a solid. I understand why she's holding on to it. I like this name a lot, but when you get quick moves like we've had recently, I think you got to take those off because these markets right now are definitely trading markets. They make it very, very difficult for long-term holds.
I get it. This is CNBS. A long-term hold of a stock is considered anything more than about 24, possibly even 48 hours. But I tell you what, ladies and gentlemen, I have not had any difficulty holding onto my Tesla stock long-term. Began buying about 6 years ago, more than 6 years ago, and I've sold 0 of my shares. Hasn't been difficult to hold whatsoever. In fact, I continue to accumulate. As I've mentioned, I've been buying with every spare cent for years. This is a great buying opportunity in my opinion. This is the perfect time for long-term investors in my opinion. Maybe not so much for short-term traders. So I think what I'm saying is I actually believe the complete opposite of what Pete was saying. In his defense though, as I mentioned, CNBS thinks long-term investing is holding a stock for more than about 3 seconds. So fair point. So hope you guys and girls have enjoyed the video, and don't forget to join Patreon with the card in the corner or the link at the pinned comment. There's loads of exclusive content over there. Well over 100 videos, loads of perks, plus up-to-date access to my Tesla stock price targets out over the next decade. And if anyone's wondering, where does my base case price target for Tesla stock compare to Colin Rush's? Very close. He's $12.90. I'm just a smidge over that. So, see you over on Patreon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.